And some more news coming in as far as the West Asia war is concerned. Israel destroys Iranian airports. Satellite images show the extent of destruction. Israel pounds Iranian military bases. And as you can see in these visuals, Iranian military backbone has been destroyed by Israel. So these are the satellite images showing the airstrikes, damage to the Iranian airports and also the military facilities, which are considered the backbone of the Iranian forces those have been destroyed by Israel in its latest strikes. These are the satellite images which have been released by Israel, where you can see the aftermath of the attack in which Israel has destroyed, it has damaged the Iranian airports and also the military facilities in Iran. And let me now go across to Aabha Bakaya of Business Today TV with all the updates of the markets in this business show. Aabha, over to you.
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise, consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange. Co-presented by Canara Bank. Together we can.
Good morning and welcome. You're with us here on Business Today. I'm Aabha Bakaya. Let's take you through the headlines this morning as markets are set for deep cuts as we kickstart trade. Here's what's coming up. Crude oil prices up nearly 20% in one day. Brent crude crossing the $110 level in trade. Prices are the highest since the Ukraine war fears in June 2022. US President Donald Trump defends his Iran war decision as crude oil prices skyrocket and inflation surges in the US. Trump says it's a small price to pay for the safety and peace of the world and the US. Asian markets tumble as crude spikes. Tokyo and Seoul are down 7%. Singapore is down more than 2% as traders fear a long-drawn conflict in West Asia. Gold and silver prices fall after an initial surge a week ago. Now down more than 9% in a week. Fears that higher inflation because of surging oil prices could force central banks to raise interest rates. Major relief for exporters. Government waives import procedures at domestic ports for goods returned due to Iran war shipping blockades. Exporters will, however, not be able to claim incentives for such returns. Breaking news on your screen, the rupee tumbling in early trade, opening at 92.2 to the dollar. That's versus 91.74 to the dollar. Rupee slumping now 46 paise at opening. Also gold, silver declining on the MCX. Gold is down 1,200 rupees at 1.6 lakh per 10 kilos. And silver slipping 3,000 to 2.65. Both gold and silver. Analysts are estimating that perhaps we are seeing profit booking on the precious metals to cover up losses elsewhere. Gold down 1,200 and we've got silver also slipping 3,000 rupees right now to 2.65 lakhs per kilo. So profit booking on the precious metals. Rupee tumbling under pressure. We're seeing what's happening to those crude oil prices over the weekend, and especially after the Qatar minister's comments late on Friday. Asia is tumbling this morning. Remember, it's not just India, but Japan, Korea, all set to see major hits on the back of those spiking crude oil prices. Look at the Nikkei for you this morning on your screen, down 7%. Hang Seng is down 3%, Kospi down 7%, Shanghai Composite also down over 1%. Deep cuts across Asian markets this morning, and it's not looking pretty. Major concerns coming to the fore about supply disruptions, the impact on crude oil prices, as well as, of course, what this will mean for economic growth going forward, as these prices are likely to impact the interest rate scenario as well. The Nifty 50 right now is indicating a huge gap down. In fact, it was 700 points earlier. It's now about 582. 23868 is where we're looking at opening in just a couple of minutes. I've got Shailendra Patnagar with me, Avinash Gorakshakar as well. Let's take a quick check on what to anticipate as we open up this morning. Avinash, good morning. Brent up 25, almost 26%, and it's causing huge jitters across global markets.
Yeah, good morning, Aabha. I think markets, obviously are in a very volatile zone. And I think crude going up to $110 a barrel is definitely bad news for India. I think a significant amount of crude is imported. So some sort of heavy selling pressure could be seen on all the oil sensitive stocks, typically oil marketing companies, paint companies, tire companies, lubricant companies. So I think you're going to see a little bit of volatility in the first half. My sense is that, as geopolitical developments move ahead, I think the markets would be now keeping this as a central focus to decide how the trend emerges. So I think, most of the domestic themes like hotels, hospitality, or that way cement, these could be possibly pockets of safety, at least in the very near term. In fact, FMCG could also be looked upon, but definitely in this kind of market, investors need to be careful. They need not hurry and buy stocks. I think they need to clearly monitor the developments in the market and then take a decisive call.
Okay, it's looking nerve-wracking as we get set to kick off for the day. 582 down, GIFT Nifty is down. Let's pull up the VIX as well, and Asian markets are a sea of red as we speak this morning. The Nifty oil and gas is really going to see huge pressure as well. Nifty Bank is down as well. Sensex, Nifty both. Everything is seeing a huge cut. Shell, we're counting down to opening bell. Just a few seconds to go. All right, I'll go back across to Shell in just a moment on those screens. But there you have it. Opening bell coming in. Let's pull up the ticks and see where we're landing at as we open after a very nervous weekend. Nifty 50 down about 2%. 500 points down on opening. Nifty Bank is down close to 3%. A lot of the pressure is actually building up there. We've got the broader market seeing huge cuts. Let's pull up the mid-cap index, for example. We've got following really what's happened in Asia this morning. Look at the names on the index. Financials, Adani, Power Grid, 5-6% cuts. And this is across the board. We're seeing really no respite this morning. It's every single stock, just two names that are seeing green, and ONGC naturally, of course, because upstream will see a benefit of those crude oil price jump. We've got otherwise pulling up more of those losers for you on your screen. And remember, crude surpassing 115 on the supply concerns, leading to that huge pressure and selling in the markets this morning. Narendra Threja also joining us on the phone line. Mr. Taneja, it's all about crude today. It's really that energy shock that's hitting the Lal Street, with oil nearly $120 on supply fears, and we're seeing equity markets tumble. What is your perspective? We've last seen these prices maybe 45 months ago, and that situation was also different. How do you see this panning out? Because markets are getting incredibly nervous of the impact on economic growth.
Well, if you look at the markets last 7 days, I think the markets were, shown tremendous maturity in a day, and they were very restrained, hoping that there would be some kind of light at the end of the tunnel and a Strait of Hormuz. Probably, as Americans have been saying that they would open the channel, at least the passage, so that the tankers traffic could start. But that they couldn't manage that. They couldn't deliver on that. So markets are extremely anxious. Two reasons. Number one is that supply probably. Saudi Arabia and Kuwait and Iraq, they may want to, but probably they won't be able to put their oil on the market between the massive supply disruption, which is already happening, but market is now beginning to conclude markets think that, war is going to escalate, in the sense countries like United Arab Emirates and Bahrain and maybe even Saudi Arabia, that they are forced to jump into the war against Iran. If that happens, we're talking of a massive escalation. And oil market, they are very used to these, these kind of war situation, volatility, but this time is a little bit too much. And that's why you see the prices are where they are. And if it continues, and if UAE, etc., they also join the war, then we are talking of a scenario where oil prices may actually reach $150 per barrel on supply disruption, and also because, of anxieties and other things. So my own sense is situation is beginning to get very, very tense.
Mr. Taneja, as you said, it's starting to get tense, and let's just look at the options for India in particular. Supply constraints there. They have said that they've got reserves, and we're looking at supplies from Russia. In fact, the government saying no one can tell us where to actually source it from, and if they need to get it from Russia, they will. But it's not just the question now of making sure that crude is available. It's actually what's happening on the price front that's making everyone nervous. So how much further do you anticipate that we could possibly see this go over the next couple of weeks? I mean, assuming that this is going to continue, given that the Qatar minister quoted $150 on Friday.
You see, look at this. Prices, of course, is a big worry for economies like us, since we import, 89% of total requirement of oil. Even if you get from Russia, you won't really be able to increase the supply overnight. For any ship to travel from Russia to India takes 26 days. So our biggest worry right now is, of course, the price, and the second is, of course, disruption. If Saudi oil, Kuwaiti oil, Iraqi oil, Abu Dhabi oil actually goes out of the global supply system, then the supply disruption is going to be a big, big worry for us, particularly because our dependence, when you look at the large economies, our dependence on imports is much higher than China or any other country. Of course, Japan is a developed country; their dependence 90%. That's a different story. And also reserves. Our reserves are rather limited: 25 in strategic petroleum reserves, and 25 days, in other places, including the tank farms and etc., etc. So let's say we are talking of reserves for 40 days, but then reserves means reserves. You can't really bottom up your reserves, and just consume everything. You will have to keep it, given this kind of situation we are getting into. So let's say we have got oil available, let's say, for next 30 days, but then we have to continue to import Russia or from wherever. But if Saudi oil is out of circulation, big chunk of it, and Iraqi out of it, Kuwaiti out of it, Abu Dhabi out of it, then the point is that the world is going to face massive supply disruption. And where is that oil is going to come from? So that's, I think, on the one hand price, and at the same time supply disruption. So I think we need to work on kind of at a war scale today to make sure that supply is available to economies like India.
So that's just it, isn't it, Mr. Taneja? We've already got the opposition standing out and saying that we should be hearing more from the government on how they intend to tackle this. Till now, we've not heard any kind of commentary coming in on this front, outside of the fact that there's a sourcing from Russia. What more are you going to be looking out for in terms of commentary, whether it be from the political regulators, or whether it even be from on the back of monetary policy? The rupee is also tumbling today. What kind of reassurance do you think markets will be looking for?
I think, two things. First of all, America should make an announcement that they're going to release oil from their strategic reserves. They've got massive reserves. And Japan, Japan has got huge reserves, so Japan should also come out, hopefully, as soon as possible. There are reports they might come out actually today. They're going to release oil from their reserve. If America and Japan, they take the initiatives, that will really reassure the markets, at least for 2 or 3 days to come. And if China also joins us, because they've got massive reserves, then that will help the situation. But need to wait. There is no other option at the moment when we're talking of the next 24 hours. And the kind of, assurance that the markets need is that these three countries, they release oil from their strategic reserves so that markets begin to cool down a bit.
Mr. Taneja, interestingly, of course, we know that there are some other Asian economies that will also be severely hit, Japan, Korea, and we're seeing that bloodbath on the screens this morning. From a global perspective as well, how deep could this pain be, and how much would that then impact us, again, from more of a monetary and economic growth standpoint as well?
You see, when you look at the economies, like, let's say, focus on Asia, Japan has got oil for, let's say, 4 months. So I think they don't need to worry too much as far as the supply is concerned. Of course, price is going to be worried. But China has got oil for roughly 5 months because they have been hoarding oil or storing oil, 1 million barrels of oil every day the last 1 year. So they've got plenty of oil reserves, both commercial as well as strategic reserves. So they are in a comfortable position. But when you look at the large consumers, I think we are the one probably more vulnerable than any other large economy in Asia Pacific region. So therefore, I think we need to kind of have a communication with a country like the United States and others so that, to secure supply of oil. Price is, of course, a worry, but that's not in our hand, but at the same time, securing oil from friendly countries so that they release from the reserves or wherever, and we can bring it to India. Right now, no big worry. I think for 40 days, we don't need to worry. But I'm thinking that if war escalates, and in that case, we need to start preparing for the supply side also from now. Because if other countries also get involved in the region, Persian Gulf region, then the challenge is going to be even bigger. Right now, situation is a bit out of control and prices are rocketing up.
Got it. Mr. Taneja, what is different this time around? You have been, observing the energy markets for decades. You have experience in seeing all the kind of twists and tumbles over the years. We haven't seen this kind of an oil shock in a long time. What is different this time around?
Well, good question. I think the Strait of Hormuz, which is the biggest choke point for the global economy, not only oil, the global economy, the Strait of Hormuz never, ever been closed. Today, for all practical purposes, you can argue that it's not really closed, but it is as good as closed. The Strait of Hormuz has never been closed. So this is a big, change. That for the first time in history, the Strait of Hormuz is as good as closed. And that despite the assurances and efforts by the United States Navy and so on and so forth, they haven't really managed to open it. That's number one. Number two, we have seen that before that, big economies like America, they've been very careful managing the price in terms of releasing reserves or putting pressure on market or playing whatever the game they're very good at playing in terms of how to control the oil price. This time they seems to be insensitive to it. America is the biggest consumer of oil, biggest producer of oil, and the economy is very sensitive to the price of oil. But this time it looks politics has become more important than the price of oil. And so therefore I think America needs to kind of do something, stop the war, intervene and all that. Otherwise I think so this is big change that never seen America being so insensitive to the price of oil. It's the first time we have experienced that kind of thing. The prices are where they are rocketing up, they are almost touching $120 per barrel, and Americans are not doing anything, neither in terms of strategic reserves nor actually at least reassuring the market. A little assurance from the American president is going to help the situation. If the statements are like, we don't care, we will teach Iran a lesson, that kind of statement is not. Oil markets don't like that. Oil markets the last 7-8 days shown tremendous. I've never seen oil markets showing this kind of maturity and resilience and all that. But now I think they think enough is enough. So they've given up and now they're going where they should be.
All right, Mr. Taneja, thank you so much for joining us this morning. Great speaking with you and understanding the complexity of the situation. Remember, right now we're seeing a massive spike in crude. We're seeing a huge cut across Asian markets and India this morning. We're seeing profit booking on the precious metals. Major pressure coming in on the rupee as well. In fact, I think the only possible area to gain might potentially be the dollar, but otherwise pressure coming in across. President Trump under a lot of heat on the back of this, causing immense inflation in the US, saying it's a small price to pay in order for overall safety of the people. But as Mr. Taneja just said, that's not going to be so reassuring for the markets, as equity markets are seeing a sharp tumble. Remember, from a monetary policy point of view, the big concern really here is the kind of impact those oil prices will put on inflation and then monetary policy and in turn growth. That's the big question. Secondly, the big concern remains that the war really sees no signs of slowing down, and as the situation gets more complicated and intense, and if further more regions, further countries amidst the region get involved, it's going to further, of course, cause a lot of chaos and impact there as well. So these are a couple of the big concerns. The uncertainty continuing to kill markets right now. They're at an 11-month low, Nifty tumbling 700 points, Sensex down 2,300 points, and PSU banks, in fact, banks and financials have taken a huge hit, down about 5% right now. Auto, metal, real estate, all of them seeing sharp cuts in trade. We're not seeing any respite. It is an out out-and-out bloodbath and a complete crack on D Street this morning. We'll see how things shape up later in the afternoon, but right now we're 750 points down as was anticipated in pre-open, and we're continuing to see that pressure. Just about to break 23,700. A quick note, Shell, on the kind of fresh support levels we're possibly looking at, because the market looks like it might be breaking through quite a few of them this morning. All right, Avinash, if I can come to you on the kind of support levels that you're watching out for.
No, I think, Aabha, I think, 23,000 as a level where possibly markets could possibly look at. I think, now talking about levels, it all depends on how the geopolitical situation changes. Because today we'll be watching for, the FI flows. If there is a huge outflow in FIs, plus if the rupee gets weaker, then I think these are going to be negative trigger points. I think, at this point of time, my suggestion to investors is that just wait and watch for some time. Let the market settle down. We have just started. So I think, rather than making a hasty entry, it's better to wait for the markets to settle down for at least an hour. 23,000 will be a crucial level. If that breaks, then I think it's going to be further panic. Till that time, I think, markets could possibly have a sigh of relief, maybe in the second half, hopefully, if some positive news flows come in. But net, I think it's a market where I think you need to wait for some time before you start, deploying your funds in this kind of market.
Avinash, what's likely to be the strategy for expiry? Because it's tomorrow. I'm just getting a head start on how do you see traders positioning themselves?
No, I think this expiry is going to be horribly bad, Aabha, because, today, post-market, if the market does not show strength, if we come closer to around 23,000 or 23,200 odd levels, then I think tomorrow you're going to see a lot of volatility since it's expiry day, and you could possibly see a little bit of jerk in the second half tomorrow. So I think, traders would like to square off their positions, in fact, today itself, because maybe tomorrow the volatility will be much higher and we don't know what's really happening on the geopolitical front. In case there are some further attacks on Iran or, Israel or US, I think that would further compound the matter. Crude oil prices at $110 are definitely not affordable to India. Any spike further is definitely going to be another, negative surprise.
Absolutely, and the VIX is still up 20%. I mean, when is the last time you saw that? 20% and more on the VIX. It's looking incredibly risky right now. As Avinash said, hang in there, sit tight, watch what happens. Let the market stabilize this morning. We're eyeing 23,000 on the downside and waiting and watching to see what plays out on the geopolitical front. India is likely to be the worst hit, despite what you're seeing on the Nikkei this morning. It's really about India because we've only got about 40 days of supply. And even though we are talking about sourcing from Russia, the Hormuz Strait has never really been closed. That's what Mr. Taneja also just told us. And that is really what's so significant about the situation this time around and those huge supply concerns. We'll be bringing you all the updates live right here on India Today. Thanks for watching.
Presented by National Stock Exchange.
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Visit! Visit! Visit!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Good morning, ladies and gentlemen. It is anything but good as far as equity markets are concerned, except for a very small pocket of sugar stocks. There is pain, there is extreme pain all around as far as Dalal Street is concerned. The Nifty is down 700 points, 23,750 for you. Across the board, whether it's Asia, whether it's Dow futures, all of them have tumbled, just as crude oil prices have hit their highest since July 2022, and that's because the Gulf conflict is now escalating beyond a point where the global economy, because of crude oil prices, is now getting hit, and getting hit badly. Look at the bank Nifty, it's down 2,300 points at 55,461. This is below 200 DMA, below 365-day DMA. The Sensex has lost 2,200 points. The Nifty small cap index is down 3%. The Nifty PSU banking index is down 4.5%. The auto index is down 4%. All of them are corollaries of crude oil prices, and there is absolute pain all around. Look at Indigo. This is one of the biggest examples of how stock prices are getting impacted because of rising crude oil prices. Indigo at the moment is the top loser in the Nifty 500 index, and at this point of time the stock is at its lowest since January 2025. So it's a 13-month low on Indigo. To discuss this and a lot more, we are now joined by Vaishali Parekh from Prabhudas Leeladhar. Good morning to you, Vaishali, and a very warm welcome. I wish I could say this is a good morning, but the entire market seems to be in a very, very mournful mood. How are you reading sentiment?
Very good morning, Shailji. Yes, I do agree. It is an absolute bloodbath, mayhem. So the worry is that Nifty is damaging charts of larger time frame also. So if we are not halting at 23,500, 23,700 levels, that's where we are nearly. I think this brings weak bias, and in all likelihood we can witness 22,000 levels also. So it's anybody's guess right now, but yes, there is a lot of pain, and I don't see any signs of reversal right now. So we got to wait it out.
Yes, I think that's the most sensible thing to say, that we are going to wait it out. At this point of time, the level of sell-off is phenomenal. Already the first 20 minutes have lapsed, but look at the volume on counters. HDFC Bank is the highest traded counter. Almost 900 crores has already been traded. The Rupee, ladies and gentlemen, is opened 45 paise lower and hit a fresh record high. Across the board, whether it's South Korea, whether it's Japan, whether it's Singapore, all of them are oil dependent economies just like ours, and all of them are in the middle of a bloodbath. Japan early morning was down 7%. Kospi, the South Korean index, was down 7%. Look at Dow Jones futures. If you think that developed markets are not getting impacted, well, they are. The Dow Jones futures themselves are down 1,700 points. So pain all around, except for Oil India, ONGC, Hindustan Oil Exploration, and a bit of sugar stocks like Balrampur Chini, like Dhampur. That's because Indian sugar output is likely to be 4% lower than last year. So that's the story, ladies and gentlemen. Vaishali, what are you advising your Ultra Chennai clients?
So right now, well, we are not getting so much into it, but I think I would definitely look for value buying. Some stocks which have come now, for example, well, let's look at some of the defense counters like BDL or HAL. These are the stocks which are quite favorable at these levels. So I would look at these stocks. And I think I would look at pharma sector also, but not in a hurry. And like you said, I mean, maybe do an intraday trading, something like that. But for it, ultra HNI, nothing much right now. But I'll wait for some confirmation. If I see Nifty going towards 22,000 levels, I would be a buyer.
Okay. Vaishali, 22,000 levels are still about 1,375 points away. But as they say in bear markets, they take the escalator down, whereas the bulls take the hard way, the stairs up. Now, ladies and gentlemen, three other sectors are impacted, which is the fertilizer space, because a lot of fertilizer raw materials we source from the Middle East, and there is a supply choke point happening there. Refineries are closed, so a lot of these products are just not getting shipped to Indian shores. So look at FACT, look at GNFC, look at many other companies such as GSFC, Chambal Fertilizers, all of them are in pain. The biggest impact, ladies and gentlemen, will be on gas supplies, because many industrial plants work on gas. Their furnaces, their machines are operated on imported gas. A problem there also means that allied industries will take it on their chin. Look at Deepak Fertilizers, 5% lower. Look at how Chambal Fertilizers is reacting, 3.8% lower. All paint companies, because their raw material prices are linked to crude oil prices. Therefore, you see Asian Paints down about 4%. Look at how Berger Paints is reacting, down 3.5%. Look at the pain that is coming into companies such as Nerolac Paints, Kansai Nerolac. And apart from that, ladies and gentlemen, look at the profit booking that's happening in the PSU banking space. State Bank of India is at this point in time at 1080, down 5.4%. This is a space where a lot of people had made a lot of money. Vaishali, would you offer some solace on gold and silver? Those prices are also cracking. One would have imagined that gold and silver would rise.
Well, we were anticipating that too, but I would say, well, it's not a trading market for sure. So stay away is sometimes a good strategy as far as trading is concerned. And for long-term perspective, I think also we need to wait at substantial support levels to get into this trade.
Okay, now I would like to point out an outlier. Look at the Nifty IT index. This is the least hit, down about 1.5%, but it's recovered from an intraday low, which is, ladies and gentlemen, 29,533. We are now at 29,736. There isn't much change, but in terms of how Infosys is moving, look at the intraday low. It's 1282. We are now at 1290. And two very large block deals have happened on Infosys and Bharti Airtel. This is perhaps people buying relative safety in the market. Bharti Airtel in itself is below 200-day DMA, but it's bounced off its intraday low 1818. Let's get Vaishali's view on both Bharti Airtel and Infosys. Vaishali.
So yes, for IT sector, let's start with that. I think we are looking at a good support band between 28,000, 29,000. So we are pretty much close to it. And right now what we are seeing is whole of IT sector is making an attempt to beat the defensive counter. And I think Infosys looks well placed. But my clarity, because I've been constantly tracking Persistent, and that is what I have seen time and again, it's holding on to 4,500 levels. So I think likewise, even Infosys 1260, 1250, that should act as a very good support level to get into the trade. And if I say that, yes, IT index is showing signs of bottoming out at 28,000, 29,000 level, then these are the stocks which can really give a good bounce.
Okay, this is across the board in IT, ladies and gentlemen. If you look at how Coforge is moving, you have a lot of activity that's seen from intraday lows. So most of these stocks are in the red, but they have recovered substantially from their intraday low. Look at Coforge, look at Emphasis, look at TCS, and of course look at Wipro, down just 0.35%. They have been beaten black and blue earlier, but this is the margin of safety that the market is seeing. The Nifty IT index was the worst performing index year to date, down about 25%. But you know, there seems to be some hope on the long side. Whether it's you know, short covering, we don't know. Tomorrow is also the weekly expiry of the Nifty. Vaishali, would you want to stick your neck out on what happens on the Nifty tomorrow?
Well, I would be always having a bounce back. I hope that this comes as a bounce back, because we have seen a good erosion right from 26,000 levels to now we are at 23,750. So it's been a substantial one-way fall. So I think a bounce back would be really some relief.
Fair point. It's my duty to also show you stocks which are rising in this kind of an environment. Please look at Balrampur Chini, India's largest integrated producer of sugar. Balrampur Chini is up 0.5%. Look at Dhampur Sugar, in the green, in fact substantially in the green, up 5.4%. Look at Triveni Sugar. This is Triveni Engineering for you, recovering very, very sharply from intraday lows. And of course, you will have many other sugar stocks that are in the green. Awadh Sugar is 6% higher. You have Dalmia Sugar up 4.3%, Bajaj Hindustan up 5%. And this is because the Indian sugar output for the sugar season is likely to be 4.5% lower than last year. Now, these sugar stocks have been beaten black and blue in terms of their valuations. They are trading at PEs of sub 4, 5, 7, 8, and that's a very good value zone in a market which is buffeted by a lot of pain. Vaishali, I don't know the last time you and I discussed sugar stocks, but anything that catches your fancy in this beaten down setup? Look at Balrampur. On March 4th, it rose 7%.
I do agree, because even last week we were seeing some attempt of good momentum coming in these stocks. So Balrampur already has got into a trend after a decent consolidation at 450. We are seeing an up move coming in. So I think this stock looks positive. 510, 520 would be the next hurdle. Once we see a clarity of the stock moving above that, it calls for further up move. In fact, along with Balrampur, I'm also looking at Praj Industries. That too has opened strong. It's holding on well, technically very well placed. So that's another stock on radar.
Okay, Praj Industries, ladies and gentlemen, is the largest producer of ethanol-related equipment, and there is a glut of ethanol in the market. Praj Industries has corrected from 873 in December 2023 all the way down to 319. There is no stock split, there is no bonus. It's pure price correction, and this is a time when a lot of value seems to be emerging in this, a multi-bagger stock which has given phenomenal returns in the last 20-25 years. What we'll do now is pause. Vaishali, thank you so much for your time. But these are troubling times for equity investors. Let's hope for the best at a time when we seem to be heading for the worst. Ladies and gentlemen, there is very little of comfort that I can offer you when it comes to equity markets, but there is one thing that you do not need to do. If you are a mutual fund investor, do not stop your monthly SIP. This is the time when SIPs work best, which is they buy the market lower and lower, and at a point when there will be light at the end of the tunnel, you will look back on this monthly investment in the happiest way. We have seen many bull and many a bear market. as do all good things and as do all bad things, they pass. These are bad times, but let's hope for the best and at the same time be prepared for the worst. The preparation for the worst is not to stop your monthly SIP in a large cap equity diversified fund. If you are entering in the markets now, this could not be a better day. Please look at a good multi-cap fund or a good aggressive hybrid fund. Invest piecemeal and put in a SIP. Thank you for watching. Please stay glued on Business Today Television.
Presented by National Stock Exchange.
Look, this investment guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
From how the markets move today to what's setting the stage for tomorrow.